Look, just since the dollar peaked in the end of September of last year, when stocks really got going, Europe's up 50%. Europe's up 50%. EFO, which includes a lot of Japan, is up 32%. The All-Country World Index, ex-United States, is up almost 25%. That's with the NASDAQ and Dow only up 15% only, and the S&P 500 up 14%. Like, these are still great returns. Like, these are fantastic quarter. The S&P was up 7% in Q4, 7% in Q1 this year. These are fantastic returns, but they're not even scratching the surface to what you're seeing in Europe as France continues to make new all-time highs, United Kingdom making new all-time highs, Denmark making new all-time highs. Like, that's what's driving things over there. And it's really comes down to composition. The S&P 500 in the United States and the NASDAQ, very tech-heavy, very growth-heavy. And as those growth tech-heavy index, growth-heavy stocks did so well for so long, the United States was the best place to be. You didn't need to be anywhere else. You didn't want to be anywhere else. If you ever did, you wish you weren't. You wish you had more United States. Like that was the trend for a long time as interest rates were falling, because growth stocks were the outperformers. Well, a funny thing happened recently. I don't know if you heard, but these tech stocks and all these growth stocks got absolutely slaughtered, right? The growthier, the worse it got hit, right? But because all these other countries around the world, particularly Europe, don't have all of that growth and tech exposure, they have more exposure to industrials and healthcare and some of the consumer discretionary stocks like Hennessy, right? Like, look at Louis Vuitton, Moët Hennessy making new all-time highs. Like, there are other countries that are doing very, very well because of their exposure in other areas that the United States has a lack of exposure to, right? So that's why you're seeing that underperformance out of the United States, but still good returns, just not as good as the other stuff.
LVMH. So I have a question about technical analysis, but this is interesting. So let's stay on this while we're here. So this is a chart. QQQ, obviously, for anybody that watches Market Mondays, that's the technology ETF with all of the tech companies, and then SPY, that is the S&P 500. So this is from the last quarter. This is from October.
This is right? From the end of September when the dollar peaked.
Okay, the end of September to now.
Yep.
So QQQ is up 15%. But yeah, explain. Can you just for a minute, because I want to move slow, because I want to make sure that everybody catches it, because some people are very advanced that watch the show. Some people just started watching today, and this is their first time ever watching. So FEZ, EFA, ACWX, all of those, they have done obviously tremendously well. What can you explain what those are again?
Sure. So FEZ is the Euro Stoxx 50. So this is basically the Dow Jones Industrial Average of Europe, right? Think of it like that. It's up 50% just since the end of September. IFA is developed markets in general outside of North America. So not emerging markets like China and India and Russia and anything like that, but strictly developed markets. Think Japan, Australia, obviously a ton of Europe. Those are developed markets outside of North America, also doing very well. Obviously, you got a ton of Europe in the developed markets outside North America ETF. And then you got ACWI-X. So this is the All-Country World Index, ex-United States. So this is the rest of the world outside the United States, dramatically outperforming the United States, right? It's basically what that means. IOO is just the global ETF. VEU is the Vanguard International Equity Funds. Just to reiterate that all these non-US ETFs, except for emerging markets just are the underperformers here, which is probably the biggest surprise.
Yeah,
if
absolutely.
You told me that the US dollar would get slaughtered for a couple of quarters and stocks would do great, I'd be like, yeah, that makes sense. Stocks should be doing great. Gold should be doing great. Silver, all these things should be doing great. But I also would have told you that emerging markets probably outperform developed markets. And that would have been wrong, right? Developed markets have really been strong. And I think a lot of that has to do with that exposure to industrials and, some healthcare and some of the areas where maybe the U.S. is lacking, right? Some of these European healthcare stocks, like in Denmark, these things are ripping, like Novo Nordisk and AstraZeneca, and like these stocks are just like, woo, you know.
So let me ask a follow up if I can, because this is interesting. So, this is good information to know for anybody, but especially our European listeners, and especially the people in London. Get your tickets for Market Mondays live in London. So we've been hearing about a global recession, and economic hard times globally. We see what's happening in France. So this is interesting because this shows a kind of a different story when it comes to stocks. Can we just go back to that last screen real quick before we transfer? Where these quote unquote developed countries, as you said, in Europe and in Asia, the whole entire world outside of, let's say, third world countries in America are doing better than America. They're doing tremendously better than America, tremendously better than American stock market. That's interesting. And this is anybody can chime in on this. Is this a sign of what's to come in the next decade or 2 decades? Where, I mean, we talk about America a lot as far as its influence is waning, but I haven't heard too many people talking about the other stocks outside of the world that are vastly beating the American stocks market.
Yeah. Well, I'll show you actually, so you can see it's not so much that the US is waning or anything like that. It's that the US has dominated for so long because of so much exposure to technology and growth stocks.
Yep.
And in low falling rate environments, those are the types of stocks that do the best, right? In other types of market environments where other types of stocks are dominating, like let's say industrials are dominating, the United States is 7% industrials. You've got a country like France is 23% industrials. So industrial stocks are the leaders.
Yeah.
Denmark is 27% industrial. So if industrials are the leaders, the countries with the most exposure to those areas are the ones that are going to be doing the best. It's less about, is the US waning or anything like that, right? And more about which types of stocks are doing the best and which countries. Like if materials are the leaders, then freaking Chile is going to be the best performing country because they got a ton of exposure to materials, right? For example. And the United States, the S&P 500 is 2% materials. So if materials are the leaders, the U.S. is probably not. The U.S., I'm sure, it might be doing fine, but they're not going to be the leading country, number one. Number two, I just want to reiterate, some people are like, JC, I don't care about France, with their wine and their bougie sauces. You know what I'm saying? Like, I live in America, right? Steak and potatoes, man. Like I don't eat, right? You can be an American investor. All these countries, all their biggest stocks trade on the New York Stock Exchange, right? Like you could buy AstraZeneca, you could buy Novo Nordisk, you could buy British Petroleum, you could buy, ASML, which is the semi stock from Amsterdam, right? We call it the Dutch Master. ASML, this thing's the beast.
We've heard of that before.
Yeah.
Yeah. What do you care whether it's a Dutch semi or a Taiwanese semiconductor or from Silicon Valley? Who cares? It's just letters and math.
Yeah.
Yeah, and I think because of all the geopolitical risks, and we talked about it before, but when quantitative easing kind of went out of the window, tech got beat up as a result. Then and we said at the London show last year, studied the CAC 40, German DAX, studied the Australian market. Like you need exposure to every market just in case things don't go well. So kudos to everyone that's done their homework and found some stocks internationally that are doing pretty well. I think
that's something we spoke about in Toronto too, Ian, when we were talking about look at the sectors that the countries are invested in. And when we looked at Toronto, specifically Canada as a country, we looked at financials as the number one sector, and we saw industrials as the number one sector. So based on the country, we'll tell you which sector is important. And if that sector is rising, then that country is obviously going to be moving at a higher pace in the U.S.
My graduates from my school being Forbes, bag drop.
Bag drop.
a mic drop. Bag drop.
Bag drop.